Okay. All right. So we are going to look at a practical application of this trading range, right? So for instance, okay, so we have an unfolding trend, right? And the market has traded above this high. Okay. Therefore, we are going to have what? A trading range. Mute. Okay. So because we have traded above this, we are going to have a trading range, right? So these are trading range. This box is our trading range. And normally, based on the rules, okay, we expect to see the market trade back into the trading range. But before, you have to look at what is inside the trading range that you want to take a trade from. Okay, so we have this small downtrend in this. So you can see that even with this downtrend, there was trading ranges. So you can even be trading this into the range, right? So within this trading range, there are lower lows and lower highs, lower lows, lower highs, and lower low. Then we broke structure. So within this is the composition of the trading range, right? And you can see that we traded above this high. So we have a Quasimodo level here, which is this, right? So now, if the market, you always have to mark this area and wait for price to come back. You can decide to sell into the trading range. That is, if by around the left, okay, we have a point of interest that you think that the market is going to, which is going to hold price or reject price, you can sell from there into the trading range. But the most important thing is to wait for price to come into this range, right? Or above the range, around the range, where you can pick the trade. So let's assume that in this case, it is coming what? Inside the range. So the market comes back into the range on the QML, right? And then we break the high. So you can see that again, we have a trading range that is formed here where the market came in to absorb liquidity, flow imbalances, and all those things. Maybe there was a, how do you call it? A base here, which price reacted to, right? So now we traded this trading range and we are here. So the thing is that this is how, yes, we've learned the trading range. This is how it behaves. Now the question is that what if, okay, this up move is just a retracement into this strong down move? I hope you understand me. This up move is a small trend or it's a retracement of this bigger trend. So meaning that this trade that you are picking them looking at what? This trading range. Okay, so once you are trading towards that trading range, you shouldn't forget that there's a bigger range here. So what is inside the range that is going to reject price to the downside? Okay, so now this is the composition of this particular trading range too. So we have a high, low, high, low, high, right? And we broke structure here. Okay, so now the market, after looking at this, so you can see that this is what? A significant demand that has been engulfed. This is what? A point of interest where you'll be looking for the trade. Okay, so now when you take this trade, your target is going to be here, right? So whilst you were trading this up move, let's say this is the monthly trend or the weekly trend or the daily trend, and this is what? A 15-minute or 1 hour trend. So I don't want to use the time, but I want you to see it the way you are seeing it on the chart. When you open the chart, you are going to see this as big and you're going to see this as small. So focus on that rather than the time frame. Okay, so now we trade down. We've gotten the trade, right? We've got a pullback and a down. Now, at this point again, right, the market, that's what I was explaining yesterday. The market has gone too far from the trading range, and you can see that there is strength. Okay, maybe you are seeing very, very big candles. right? It's left the trading range with strength and momentum, and then distance is very far. It's far from it. So what it means is that logically, it means that the sellers are too strong. Okay, so if the sellers are too strong to move the price that low without the buyers being able to move it up, then this is not likely to go deep. Okay, so what I mean is that, so if you have an uptrend and we break structure like this, and price goes too far with strength, price is not likely to come down here. If it does, it is going to do it this way. Maybe we get here before coming back. Okay, so because of that, price couldn't go here. So when that happens, you'll be looking for trade around the base of the trading range, even, or let's say below below 50%, or 20, let's say if you divide 25, I guess you are going to look for trade below the lower part of the trading range, right? So what will be there? Okay, so in this case, we have a strong support, right? And a drop-based drop. Strong support and a drop-based drop that you are going to use. So now you will find a trade around this place, okay, to see price move lower. All right, so I'll go to the chart and then we'll look at some examples. I hope this is clear.
Yeah.
Okay.
Yeah.
Okay. So stop sharing. Okay. Okay. So on the chart, I think I like this one. Right. Today, my trade was UGBP. This. Okay. You see this? Look at it well. Right? Okay. So looking at this, right? Price broke structure and instantly it lost momentum. You can see we took this low and instantly we lost momentum. What did price do? It went deep into the trading range. Went deep into the trading range. So now, if we are in a downtrend, right? We are in a downtrend and we are finding this. We look for reasons to take trade inside the trading range. Maybe find, some of us will find this, depends on this area, went slightly above that area, that other block, which is not bad, right? Now, if you look deep, you see low, high, lower low, right? And which has already been taken. So we have a QML level here that was taken by this. Okay. Now check this candle. Okay. So I think price came around this level. Let me zoom in into this particular candle, slightly above this. So it came in this area, in this fair value gap here. Okay. So you see, if you had reason to take the trade, maybe you would have tried this particular one, but at least you know that it is coming, it is back into the trading range. So around this area, where we have a QML level that has been tested. So this is a candle. So you can see that there's a fair value gap around that area, right? And this one failed to fill the fair value gap. Okay. And then again, I think this will be a no demand candle. Yes. So you see, no demand candle. The volume is lower than the previous two. So that's where price traded into. Right. Now, we broke structure again. Look at the distance. Okay, look at the distance that price gave. Price went far away from the trading range, so never came in. Never came in. So this part is still exposed, right? So you continue with the trend. You continue with the trend. We lost here. So here, price traded into this candle, almost here. Okay, and then we broke structure to the downside again. Broke structure to the downside. Downside. Okay, so see, immediately we took this low. Immediately we took this low. Look at how price went back inside the trading range. So this was, I think I marked the wrong trading range. For this is our trading range, right? Okay, so we took this low and price went deep into the trading range again. Deep, right? It didn't continue down like this one. It went deep into the trading range. Now we have traded below this particular one too. So we have a new trading range. Okay, look at the momentum. Okay, so look at it well. So from here, price traded below it and consolidated around here and started going up. So we know definitely that we are going to have what? A deep retracement. Okay, so inside a deep retracement, if this is going to be a deep retracement and we have a daily chart, this is the QML level, right? QM level, high, low, higher, high, down. Okay, and it's also, if you are looking at it from a bigger picture, it's this, and they are all at the same level. So let's take this. Okay, so if this is a level, then we can say that, okay, if the trend is going to continue to the downside, then we can expect a reversal around this level. And what is there? Opposite it, we have a drop, a base, and a drop. So we can be looking inside this area. Okay, and expect price to trade below this, except if this is what? A higher time frame point of interest. Let's say that level, price has traded into a higher time frame point of interest. What's the higher time frame point of interest? Here, okay, we have this level here, which price hasn't hit yet. Okay, so we have this kink around this level. Okay, so if this is the place market is supposed to reverse, then we will see that this is still going to reject price, but not low, and then we continue to the downside, to the upside. So this is the level, right? This is a good level. You can see liquidity has been taken around this place. Liquidity has been taken around this way, but we have what? A double, yes, something like a double bottom. So we can expect to see price trading to the lower side. So that is how you follow it. Let me give you another example on the GBP. Yeah.
You've taken the chart away. Where you marked, I see that price has touched the higher time frame.
You were point of interest.
Yes.
Okay.
Yes.
So let's check if there is a base drop there. On the daily chart, there's a base drop around that area, I think. Yes. So yes, but it didn't touch it. I think it touched the wick. Okay, so for something like this, okay, so we can expect this is still a entry point. We can sell from here. We can still sell from here because there's the QML level and there's a base drop, which is a confirmation in the trading range. But maybe that price may not reject up to creating a new low, right? You get me? So it is an issue of probability. But when it reaches here and take the trade, right, and it's supposed to move to the downside, you will just be following that trading range. So for instance, here, let's look at the 1 hour chart. Okay, so you see the 1 hour chart. When we broke structure, so we have low like this. Okay, so instantly, you see this area too, there was a trading range at this point. There was a trading range at this point. Look at distance, right? So market just came to test here. And if you look at it again, you're going to see the same thing I talked about. Okay, strong zone with what? Kink. So the market traded just into this area, into this. Okay, if you change it to another time frame, we are going to see a drop base drop, right? So you see drop base drop, market traded into the base and then came down. So now after that we broke structure. So it had a clear break of structure here. Okay, had a clear break of structure here. Okay, and market had already created this one below this high. Okay, and you can draw it with a trend line if you use a line chart. Maybe I think I do it on the 30 minutes. Okay, or 1 hour. Okay, so you can draw a trend line. You can draw a trend line. You can draw a trend line like this. Okay, now we broke structure, we came in, and inside this zone, this is a trading range. This is a trading range, right? Inside the trading range, you have a drop, low, high, lower low, higher high. So you have what? A Quasimodo level here. Okay. Okay. So this is your entry. Your take profit is here, right? Next, okay, we broke this high. Now, what happened? And you have to be switching from one time frame to another to see really what happened. So here, you can see here, we have a support and resistance. Okay, several times, very strong support. We have a strong rejection. So to find strong support, you can go to a higher time frame. Okay, so look at the daily chart. Strong, very some vim bikra, right? So where is it? So you have a strong, where are we? Okay, so we have a strong resistance that has been broken. But before price broke that resistance,
Alex, we can't hear you.
okay, sorry. So we have a rally, a base rally, opposite what? A strong resistance and support. And this is the only thing some people trade. Okay, so if this is going to be my setup, okay, and again, that base has been engulfed. Okay, that's the reason why it is for the rally base rally. One, this is going to be my area to look for the trade. Okay, then I can go to a lower time frame to find a place inside that area. Okay, so this is my base, right? This is my base. Look at this. Look at this candle. Can you see it? Okay, this is a demand candle, right? No supply candle. Okay, so that is where the market just came and touched easily. Came to touch that area, and then we continued going up.